Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Wednesday, August 13th, 2008. Japanese GDP hit forecasts of a 0.6% decline for the second quarter, with annualized GDP falling to negative 2.3%. The economy had expanded a downwardly revised 3.2% in annual terms in the first quarter. Exports declined in the second quarter, the first time that's happened in 3 years. The Japanese stock index, the Nikkei 225, was down 2.1% on the news, which boosted a wave of risk aversion in the Asian session. The current account surplus for Japan shrank to 490 billion yen. That's the fourth straight month of declines and reflects a similar situation as the GDP data. Foreign demand for Japanese products is stalling, as the BOP basis trade balance showed. In Australia, the WMI consumer sentiment increased 9.1% as consumers felt optimistic about recent drops in oil. Wages in Australia rose 1.2% in the second quarter and are up 4.2% on the year. Those figures beat expectations and will worry the RBA as it reflects the potential for inflation pressures to continue. The Aussie-yen pair, a favorite of carry trade because of the high interest rates in Australia and the low ones in Japan, showed a clear case of risk aversion overnight. Traders, seeing the poor GDP and stock performance from Japan, sold the pair down to the 92.10 level. From here, the Aussie found support and managed to pair all the overnight losses. In the UK, July's claimant count increased by 20,000, the highest since December of 1992. It's the sixth straight month of increase in unemployment claims and comes on the heel of an upward revision in June. The unemployment rate rose 5.4% rose to 5.4% for the 3 months through June from its previous 5.2%. Wage growth in the UK shrank as the average earnings index dropped to 3.4% from the previous 3.8%. The data makes it apparent that the labor market in the UK has slackened. The Bank of England's quarterly inflation report suggests that inflation in the UK will come down rapidly after peaking in the next month or so. The bank also cut its growth forecast, signaling that policy members may be more dovish going forward. The pound yen, another favorite for carry trade, was down sharply as well. From an overnight high near 207.40, the pair plunged 450 pips in the yen's favor, finding support near 202.50. Today's losses came mainly after the BOE report and continued into early New York trading. As its support, the pair began to rally somewhat, climbing back to 204.40 in the afternoon. The pound-dollar pair saw a 250 pip move in 2 hours following the UK releases. After a period of consolidation overnight, the pound broke below 1.8950, continuing the downward trend in this pair last week. It was near 2.0 at the beginning of this month. Following the US releases, the dollar extended its gains to test 1.8640. Against this backdrop, US retail sales data did not have as much impact. Sales fell 0.1%, with the core reading, which excludes autos, rising 0.4%. The jump in sales, seen following tax rebates, has now definitely faded. The U.S. import price index climbed 1.7% on the month and 21.6% on the year. The fall in the dollar and increase in oil and energy prices are the major factors here. U.S. business inventories were up 0.7% on the month, higher than expected. With sales up 1.7%, the inventory-to-sales ratio decreased yet again to a record low of 1.23. An increase in inventories while sales are also up, as well as a positive sign for GDP. U.S. stocks were down today as the auto industry took a bite out of the sales data and earnings outlooks looked shaky. The dollar-yen fell to test the 108.50 level, but bounced back up. This level was resistance and has now turned to support. Tonight, Japan releases its measure of services industry, and New Zealand posts its manufacturing PMI. Overnight, Switzerland reviews a report on consumer confidence. Germany will post its GDP and CPI data. Also overnight, the Eurozone releases its CPI and GDP, along with the ECB monthly bulletin. Tomorrow in the U.S., we get another round of data on consumer prices, along with weekly jobless claims. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.